Mr. Montek Singh Ahluwalia, Deputy Chairman of the Planning Commission, who joins us live from New Delhi. Mr. Ahluwalia, good morning. What a delight to have you back on ET Now. Mr. Ahluwalia, let me start with the moot point, and the global moot point is that there is a rout in gold and silver, there is a panic selling in copper and in crude. Do you think secretly you're a happy man given the way how gold and crude has moved, and do you think this is a big blessing in disguise for India?
Well, there's no doubt that a softening in both gold and commodity prices will be good for India. I mean, from our point of view, the big surge in gold prices was creating a completely artificial demand for gold as a safe financial asset, or not a financial asset, but a safe savings asset. I think we expected that there would be a correction. The fact that the correction has taken place will hopefully moderate that demand, and I think savings will now go into other channels which are ultimately more productive. So that's unambiguously good. And clearly softening of commodity prices is also good in the sense that we are importers, and this will lessen both the burden on the balance of payments and also the price pressure domestically. So on the whole, that's good. We're never in favor of panics. I mean, we want a reasoned correction. And I think that's more or less what's happening.
Mr. Ahluwalia, hi, morning. So would you say now that the case is only stronger for the Reserve Bank to go in for aggressive easing, or do you think there's some more wait, or rather while to go before that were to happen?
Well, as I never like second guessing what the Reserve Bank should do, but I mean, if you look at the economic situation, basically I think number one, there's more fiscal space than was thought 6 months ago. And clearly the softening of oil prices actually reduces the implicit subsidy burden resulting from the petroleum price regime, which is in any case being corrected with diesel prices being adjusted. So I think there's more fiscal space. Secondly, on the growth front, we haven't yet seen the beginnings of a recovery. I think we've seen maybe the end of a deceleration, but clearly growth at 5% is well below a normal growth level for the Indian economy, even with a depressed global situation. The most important thing is price pressure is easing off. March inflation numbers actually came in a little better than was expected. For the first time, the inflation rate was below 6%. That's only 1 month. So I think one should not get too excited by what happens in 1 month. But if you take the trend, it certainly indicates a softening of inflationary pressure, and the commodity price trends globally can only accelerate that. So I think all of those things suggest that the RBI now has more room to support the growth process in the economy.
But Dr. Ahluwalia, I attended a big investor conference about 10 days ago, and the message I have come back with is the following: that the finance minister has done a great job of managing the fiscal situation, but in order to manage the fiscal situation, government spending has taken a hit and growth also has taken a hit. Are global investors right in the judgment?
I don't think that's correct at all. I mean, you cannot simultaneoly say we should have a fiscal correction and then expect a huge expansion in government expenditure. In the Planning Commission, there are many things we want by way of expanded programs in education, health, infrastructure, etc. But from a growth point of view, what we need is more expenditure on infrastructure projects, and that doesn't have to come from the budget. So I think that those who are concerned about the level of expenditure should really look at what the government is trying to do to remove impediments in the implementation of infrastructure projects, which are either being managed by public sector corporations, but that's not part of the budget, that's part of their corporate expenditure, or increasingly by private sector investors following the policy of public-private partnership. I personally think that the concern about the expenditure stimulus in the economy at this point is correct insofar as we are talking about investment, especially in infrastructure. Government has done a number of things to get this moving. They're not yet complete, and I would say results of those actions hopefully will come in the next few weeks. That's where we should concentrate on. I mean, the fact that expenditure is being constrained in the budget is not, in my view, at all a legitimate criticism of the situation.
Fair point. But the Finance Minister, Mr. Ahluwalia, in Toronto told investors that India is committed to getting back at 8% growth run rate.